Good morning, traders and investors. Roger Scott here, senior strategist for Wealth Press. Today is Friday. It's July 7th. The fragmented week is over. Today, believe it or not, we actually may get a full day with market participants finally coming into the market today. Remember, Wednesday was like a Monday after a 4th of July weekend, right? And then yesterday, market started getting a little less fragmented. And I think today the market's going to be operating on all four, especially with the employment report. Now, let me tell you what's going on, why the market was down. Now, I get into it really hot and heavy. Before I begin, let me just ask you for a few favors. Like our channel, go to the YouTube Wealth Press channel, like our channel, subscribe to our channel, subscribe to my Telegram channel, which I post freebies, stock picks, pictures of my dogs and cats, give you market news. Go to rogerscott.com/Telegram or follow the link in the YouTube Wealth Press channel. Most importantly, we've opened up our VIP room at 11 a.m. today, Friday, at 11 a.m. to the public at no cost. If you have questions from this video, if you want to come and join me, if you want to say hello, if you want to see the latest stock picks, come on in. The water is warm over here. The link is below this video or above this video, depending if you're watching it on the YouTube Wealth Press channel or our page. Now let's get into all of this stuff. Why am I monkeying around with all of this nonsense with you? So today we've got the employment report. Now typically the employment report is a very important report, but today it's a super important report. Why? Let me explain to you. Yesterday we had the private ADP report, which foreshadows the public report, today's report. And the number was expected to be 235,000. They got 497,000, which means if assuming that the public report comes out like this, that means the job market is super resilient. And if the job market is super resilient, there's no reason for the Fed not to keep raising rates, which is why you saw the market down yesterday, why you saw pressure on real estate stocks, higher interest rates impact. So again, if the report today comes out way better than expected, and I don't know if it will, but if it comes out, say 300, 400, something crazy like that, that's going to put more pressure on real estate stocks, chip stocks, and stocks that are interest rate sensitive. So again, want to just throw that out. Now, on that news, the bond market really crapped out yesterday, and it looks like the Algos had a little bite at it. I think the bond market has bottomed out here. I think it's going to go higher. It seems to be bottoming near this current level before going higher. You could see it right here. I don't think we're ready for interest rates to go higher just yet, especially with the Fed saying we're going to hold things steady for the foreseeable future. Again, we already have a priced in the fact that they're going to be raising rates 0.25 in about a month or 5 weeks, give or take. So I think the worst as far as the bond market's behind us. I just wish we rallied a little above the 105 level. We need to see a rally above the 104 level. But I think it's a pretty good time to start buying bonds. And Algos were really going crazy on the bond market. As you could see here, they were trying to really manipulate traders into thinking that the bond market is just going to crash and burn. But I don't think that's the case. Also, the market is really oversold right now. So I think the downside selling pressure is behind us, especially if the news today doesn't come out so bad. And you could see the expectations right here, 213,000. I'm really looking at the unemployment rate. That's what I'm looking at, really good, and private payroll. So it'll be very interesting where things come out. The market's opening up slightly lower. This is randomness. The Nasdaq down 24 points, Dow down 9. This is pretty much a nothing burger. Let's talk a little bit about the economy. And we could figure out what we should be expecting from this point on. And it'll kind of summarize what I just discussed. Market participants are looking ahead to key non-farm payroll report for further clues on the trajectory of interest rates. Remember, if the employment is really solid, that means people are working, they're making money. That means the Fed has license to raise rates. Wall Street's main indexes closed sharply lower, strong private hiring data. That's the ADP report. Heightened bets that the Fed will keep interest rates higher for longer to cool the economy and inflation. Energy stocks lost ground. Home builders lost ground on fears about demand that mortgage rates reached the highest level of the year, which they have. Also, bank stocks are under pressure. We're still short KRE, which is the regional banks. I'm hoping we can get some more downside from them because we have a put. Here's the report that I was talking about yesterday. Economic data on Thursday showed that U.S. ADP non-farm payroll changed by 490, half a million. My God, stronger than the expectation of 228. But this report has been wrong several times, especially the last couple of months. So it's underscoring the resilience in the labor market, which means the Fed has a license to go bananas. And you know how I think about bananas in the tailpipe, monkeys, no monkey business. I don't like when anybody goes bananas. Dallas Fed, except me and Clyde, my cat. Dallas Fed President Logan expressed her apprehension about persistently high inflation and stressed the necessity of further interest rate increases at an event in New York Thursday. We're now pricing in a 90, for all intents purposes, 90% chance of a 0.25 basis point rate hike later this month. Okay, later this month. So there's less than. I thought time flies. I know it's like every 5 weeks, but times just get away from me. Today we're looking at the big daddy, the big non-farm payroll report, U.S. non-farm payroll report, and we're looking at the number to be at 225,000. I think it's going to be higher than that, which may put a little more pressure. Unemployment rate is what I'm looking at. We're looking at 3.6, 3.7. That should come out on the level. Europe erasing early declines as investors cautiously await U.S. non-farm payroll report. Gains in mining and bank stocks are leading the overall market higher. It's kind of interesting because banking stocks crapped out here in the U.S., and they're usually pretty correlated. So it's interesting to see that that's happening and something you should take a note of for today. China. Oh, I feel bad. I really do feel bad for them. They're getting it under the chin. But they're not making the best decisions all the time. They're making decisions from a position of politics and not economic policy, but their economics. I mean, their human policy, not their economic policy. Closed lower as a series of weak economic readings over the past week dampened the outlook for the world's second largest economy. Investors anticipate additional stimulus measures. Meanwhile, computer and semiconductor stocks underperformed on Friday, which is just telling us that they're following the route here from the U.S. It'll be interesting to see how bank stocks do today in light of yesterday and if interest rates finally rally, which they will if the report is not that bad. Japan's Nikkei closed lower, tracking declines in U.S. stocks overnight as signs of a robust U.S. labor market drummed up concerns over rising rates. Keep your eye on Levi's. They tanked. The retailer didn't do well on earnings. It may cut into other consumer discretionary stocks. Nike didn't do so well either, by the way. Costco said their comparable sales are down. That's not good because Costco sells a lot of consumer staples. KLAC, that's a semiconductor manufacturing, got downgraded. Not good for chip stocks. And Newman Gold Corp, not Goldman, Gold Corp rose, so we may see a little more upside on gold. And JP Morgan rallied, so we may see a little upside in financial stocks. Paramount, I really like this stock. I'm cheering for this stock, but it dropped 3% after they were downgraded. Not good. I really love Paramount Global. No earnings surprises today. Keep your eye on volatility, as I mentioned yesterday. As I mentioned, like right here, about 3 weeks ago, I said volatility looks like it's bottomed out right around here, and it's going to start rising. It did. It went from about 13 to about 17. I think it may have a little more to go depending on today's report, but for all intents and purposes, this looks like it might have peaked out. Not so sure. The overbought levels are there, so keep your eye on volatility. If the report is good today, if it's not like 400 or 350, if it's like 250, 300,000, within range, then volatility should subside and we should see some upside in the upcoming days. Keep your eye on the bond market. I think the bond market's going to start rallying because Algos had a nice little bite of the algo market. In terms of sectors, something that I've been talking about quite a lot. Look at it on a monthly basis, folks, and look at it good. Consumer discretionary, which after the report we saw on, what was that earnings stock? On Levi's, may not sustain itself, but consumer discretionary has been sticky. But communication and communication and technology have not. Real estate looks like it's coming up. Financials look like they're coming up, not banking stocks, but financials outside of banking stocks and real estate. Look at these two sectors to give us a little more upside, especially if the report is solid today, because interest rates and financials and real estates don't go well. But certain stocks, like insurance stocks, they don't have as big of an impact. So keep your eye on real estate, insurance, and financial stocks. Keep your eye on industrial basic material. I'm not a big fan of industrial right now, to be quite honest with you. I think industrial stocks are going to come down a little bit, and I think basic materials is going to join them. So I'm not all that bullish on them, as you could see right here. But the next couple of days, we may get a little bit of a reprieve. Not liking technology, not liking communications, loving consumer staples. Think healthcare is going to start coming up. As a matter of fact, let's look at healthcare on a momentum level. Let's see how it looks. No, healthcare still looks like it's got more downside to go. Yeah, healthcare looks like it's just getting started. So it's got about halfway to go. Be careful and keep your eye on momentum levels. They're going to be very, very vital. Now, as I mentioned, real estate looks like it can move today. Financials looks like it could move today. Technology and communications can have a bounce if the report, if the employment report is a lot better than expected, because interest rates would go down, and that's a boost for technology and communication services. Also, real estate would rally if the report was good today. So keep your eye on the financials, on real estate, technology, communication services today. Overall, technology and communication services are going down. Now, looking at the top stocks right now, just to give you an idea of what's looking really good, Carnival's looking really good. NVIDIA's not looking bad, although I'd be really cautious with it, like really cautious. I would stay away from Meta, although it looks really good. Tesla, I would stay away from Tesla. I like Norwegian. I like Carnival. I like Pulte Homes right now. I like GE a lot right now. I may go long GE. I like Netflix, actually. I like Adobe right now. I like American Airlines. I like the airlines. I really like the airlines. I would be cautious with, I like Devon Healthcare. This stock looks really good right now. But I think you guys are getting the point. The market is becoming a little more mixed, and the tech rally that we were seeing doesn't look like it's going to. It looks like it's going to fizzle out unless the numbers today are just really, really low, like really, really low. I still believe the top here in tech is here, and I think it's going to try to huff and puff, but I don't know if it's going to take out the high unless earnings, which are starting to come up end of next week, are way, way better than expected, and the Fed data next week is good. But I wouldn't hold your breath. I think technology stocks are on the way down, and if you look at momentum levels here on Infotech, you will see 50-day moving average is way, way overbought, and the 20-day moving average is already at 50th percentile, and it's coming down. And I mean coming down. So, see that? So I think we peaked out on info technology stocks. Now, you got to keep your eye on the bond market. The bond market is being, and volatility. The bond market is being totally manipulated by algos right now, and I think they've overstayed their welcome. I think they triggered some stops here, and I think we're going to see some upside unless the employment report is mimicking today like 500, 400, 350,000. If it's just a hair above 263, it'll be okay. They have not been as accurate, but I'm looking for something in the 200,000 range. But algos have been hitting bonds, which is an opportunity to get into the upside in the bond market. What I would suggest would be going to 28 days out, 8-4, plenty of liquidity, buying the 100 call, and maybe selling the 103.50 call, as long as you can get more than 50 cents out of this, which means your total cost would be about $1.25. Not bad, right? And if nothing happens in 2 weeks, just get out. Now, folks, before I finish off, I want to remind you, please, subscribe to our Telegram channel and join our VIP room. It's happening at 11 a.m. Eastern time today on Friday. The link is above or below this video. Subscribe to our YouTube Wealth Press channel and post comments below those videos. I review them and I answer them judiciously. Now, today at 1 p.m. Eastern time, I'm sitting down with Guy Cohen. Yes, Guy Cohen. The fancy-speaking British guy. He's great. Live as he shares one of the biggest loopholes in the entire stock market. It could be the explanation for stock moves that just don't make sense. You see stocks that don't make sense and you want to know why? Guy's going to explain it to you. Like Baidu, for example. After crashing 76% from its high, it was one of the worst stocks in the market. But then something unexpected happened. The floodgates opened up, and a wave of optimistic activity overtook the stock. Why? Well, that's a great question. At the time, there was no legitimate reason to buy the stock. I thought it was a dog with fleas. But it didn't make sense to a lot of investors. But the truth is, they just were not in on behind the news scenes. There were some scenes behind going on. That's where Guy comes in. He's research and patent indicator. Yes, patent indicator. It's designed to spot these signals, and he wants to show us exactly how it works. You guys don't want to miss out on this. It's going to be good stuff. Follow the link below this video, either on the YouTube Wealth Press channel or on the Wealth Press page, and check out 1 p.m. I'm joining Guy live. I've got my VIP room, free, no cost, at 11 a.m., and Guy at 1 p.m. You don't want to miss out, and I'll see you guys later. Remember, Ask the Pros is at noon in between those two. So I'll see you guys today at 11, at 12, and at 1. All the links are there. Have a great weekend, and keep your eye on the bond market. I think we're going to get a little rally if the report is good today. Bye.